Good evening, everyone, and welcome to tonight's debate on one of the most controversial issues in modern economics. Should billionaires be taxed at a higher rate to close income inequality? On one side, we have Satoshi, who argues that a wealth tax is necessary to address the growing wealth gap and promote fairness. On the other side, Kadi believes that higher taxes on the wealthy could have negative consequences, ultimately harming the economy and stifling growth. Let's dive into the discussion. Satoshi, we'll start with you.
The growing disparity between the rich and poor is unsustainable. In recent decades, wealth inequality has reached record levels, with the richest 1% owning more than the bottom 90%. A progressive wealth tax can help address this imbalance. While income inequality is a valid concern, a wealth tax on billionaires is not the solution. Billionaires are not hoarding their money. They are investing it in the economy, creating jobs, and contributing to technological advancements. Billionaires often amass wealth without contributing proportionally to the public goods and services that support their success. A wealth tax ensures that those benefiting the most from society also contribute the most to its betterment. A wealth tax discourages investment. Billionaires often invest their wealth in businesses that create jobs, drive innovation, and fuel economic growth. Taxing their wealth at higher rates could discourage these investments and slow economic progress. The concentration of wealth in the hands of a few creates social and political instability. By taxing the wealth of billionaires, we can redistribute resources to improve healthcare, education, and infrastructure for the broader population. Billionaires already pay substantial amounts in taxes. According to reports, the wealthiest individuals in many countries pay higher tax rates than middle-class workers when considering their income, investments, and capital gains. Billionaires have the means to shield their wealth from taxation through loopholes and tax havens. A higher wealth tax would level the playing field and ensure that they pay their fair share. A wealth tax could lead to the flight of capital. Wealthy individuals and companies may relocate their assets to tax havens or move their businesses abroad, which would result in a loss of jobs and tax revenue in the country. The ultra-wealthy have the ability to influence policy to suit their interests. A higher wealth tax would help prevent this concentration of power, ensuring that democracy functions in the interest of all, not just the richest. Wealth is often tied up in assets like stocks, real estate, or investments. A wealth tax forces individuals to sell these assets to pay the tax, which could disrupt markets and cause volatility. Wealthy individuals often benefit from market advantages, favorable policies, and tax breaks. A wealth tax ensures that they contribute more to the economy in a way that directly supports the people who help create that wealth. Create an environment where more people can access opportunities for wealth creation, including better education, healthcare, and a favorable regulatory environment. A wealth tax can help fund critical social programs, such as universal healthcare and education, reducing inequality and increasing access to opportunities for lower income groups. A wealth tax penalizes success and entrepreneurship. The reason billionaires have accumulated their wealth is through hard work, risk-taking, and innovation. Taxing their wealth more heavily discourages future investments and undermines the entrepreneurial spirit. Higher taxes on the wealthiest individuals would not only generate revenue for public services, but could also encourage more philanthropic contributions by the wealthy, knowing that they are already contributing a fair share through taxes. Taxing wealth instead of income can reduce the incentive for billionaires to use loopholes or offshore accounts to avoid paying taxes. This would make the system fairer and prevent the ultra-wealthy from bypassing their civic duty. Implementing a wealth tax would be complex and difficult to enforce. There are numerous challenges in valuing assets like art, real estate, and stocks. This could lead to increased bureaucracy and inefficiency. Studies have shown that inequality stifles economic growth in the long run. When wealth is concentrated, there's less money circulating within the economy, which limits overall consumption and investment. A wealth tax can boost the broader economy. A wealth tax could encourage tax avoidance schemes. Wealthy individuals may try to move their assets abroad or invest in ways that minimize their taxable wealth, leading to a decrease in overall tax revenue. Countries that have implemented higher wealth taxes, such as Switzerland and France, have used the revenue to fund essential services without stifling innovation or entrepreneurship. The fear that wealth taxes will harm the economy is unfounded. Instead of taxing wealth, we should focus on addressing the root causes of income inequality, such as education, access to capital, and economic mobility, so that more individuals have the opportunity to accumulate wealth. A progressive wealth tax could ensure that billionaires contribute a reasonable portion of their wealth towards societal needs without significantly diminishing their ability to invest or grow their assets. High wealth taxes may drive away the very individuals who are driving innovation in critical sectors like technology, health, and energy. This could harm the global competitiveness of a country. Increased wealth taxes would reduce the reliance on regressive taxes that disproportionately affect the poor, such as sales taxes and property taxes, which are often higher for low-income individuals. The argument that billionaires don't pay their fair share is misleading. The wealthy contribute to society through investments, business creation, and philanthropy, and the economy benefits more from them being able to keep and reinvest their wealth. Finally, a wealth tax is an effective tool to begin correcting the historical injustices that have led to racial and economic disparities. By taxing billionaires at a higher rate, we can build a more equitable society. Finally, the issue of income inequality should be addressed through policies that encourage growth, job creation, and upward mobility, not through punitive taxes that may harm the economy and hurt job creation.
Thank you both for an engaging and insightful debate. It's clear that the question of whether billionaires should be taxed at a higher rate to close income inequality is complex. On one hand, a wealth tax could provide significant revenue for social programs, redistribute wealth, and reduce inequality. On the other, it could discourage investment, hurt economic growth, and drive away the very entrepreneurs who are creating jobs and opportunities. As we move forward, we must consider how to balance fairness with economic growth and innovation. We leave it to you to decide. Should billionaires face higher taxes to address inequality, or should we find other ways to tackle this issue without stifling progress?